Today's housing market update is about what everybody is missing right now. Inventory of homes for sale, according to the latest Redfin data, is actually under last year. That's right. For the first time since 2023, we have fewer homes on the market than we did last year. And it's astonishing. Right now, active inventory is down 0.06%, effectively flat, but technically down slightly. And so active homes for sale, they're not really improving nationally. And there are markets where we're seeing more homes, and markets where we're seeing fewer homes. But we're also not seeing buyers run back into the housing market either. In fact, when I look at pending sales of homes for sale right now, pending sales, we are down 3.3% year over year. So we don't have more buyers really running back in. And new listings, if I look at the number of actual people putting their houses on the market nationally, only up 1.1% year over year. So this market remains very strange. Something is off. And I think I found out why we're seeing this trend continue. And I'm going to show you that here in a few minutes. So good afternoon. My name is Jason Ferrier. I'm a realtor. I'm an investor here in Central Ohio. And this is my weekly housing market update for you to learn all about the current housing market. And so we will review the national outlook. Then we're going to review an article from Resi Club that I think tells us what, really what's going on with this market, why everything's so locked up. And then I'm going to get to the markets you want me to review. So if you have an area of the US, drop the zip code in the comments and I will jump on it here in the second half of the live. This live will probably go just hopefully just over an hour. That's my goal. So I'm not going to get to a ton of zip codes today, but I will get to as many as possible. Anyway, that's what we're doing. Let's get started. By the way, thank you for watching. Thank you for joining us. If you can, hit the like button, subscribe to the Housing Nerd, and certainly share this video. If you share this during the live, it gets more people involved and definitely helps out the algorithm. Folks, I'm just a normal person who loves real estate data, who likes the housing market. I like to help people buy and sell homes. I'm an investor, and this is your time to learn. So let's start learning. All right. So before we look at these charts, I'm going to go to the article. Every week, Redfin pushes out an article that kind of gives us like a snapshot of the market. And remember, this is all national stuff we're looking at first. So what you're seeing in your market may be completely different than what we're going to review as we start off. I know here in Ohio, it's completely different. So, but it's important just to look at the overall picture and then we can drill down right into your local area. So the title of this Redfin article, and hopefully y'all can hear me. Hopefully there's not a sound problem like I've had in the last few lives. I'm just going to check the comments to see. So if you can let me know if there's a, if you can actually hear me, that would be great. All right. So 2026 housing market. 2026 housing market mood. Buyers are cautious. Sellers are showing up. And agents see signs of a busier spring ahead. Is that true? We're about to find out. Pending home sales are declining, and homes that are selling are taking more than 2 months to find a buyer. That's true. Overall in the US right now, the time it takes to sell a home is going up. There's no doubt. The 2026 housing market is off to a sluggish start. Tell me something I don't know. But there are signs of the great housing reset. What? Predicted by Redfin economists could be on the horizon. I don't think their definition of a housing reset is what many people think. It's funny that they said that. Housing costs are declining, okay? New listings are rising. kind of, and agents are cautiously optimistic. Like, sales have been so bad over the past few years. Like, any increase in the number of transactions would be a win for agents. I mean, that's the weird thing, right? Like, we've been so like the transactions have been so low, the number of home sales have been so low. That's actually kept home prices higher. Unbelievably. We need more sales to see lower home prices, which is completely counterproductive or counterproductive, counterintuitive to what most people would think. Homes are selling at their slowest pace in 6 years, and pending sales are down. The typical homes that sold in January spent 64 days on the market before going under contract. That's the longest span in 6 years and roughly a week longer than a year earlier. Pending home sales fell 3.3% year over year, in line with declines that we've seen over the last few months. The bright spot of the slow market is the buyers who are out there have negotiating power. Some sellers are outnumbering buyers by a record gap. Yeah, so people look at that. Like, I've had people comment on my channel and go, "Hey, housing nerd, like, look at the difference between the number of buyers and the number of sellers out there. That's a crash." It's like, no, that's not a crash. And I'm going to get to why, because I think I figured out why we're seeing all this. It's, but buyers do have more negotiating power, and it depends on where you live, right? Like, where I live in Ohio, sellers are not desperate for the most part. There's not a lot of forced selling. There's just not. Like, this wave of motivated selling turning into distress selling hasn't shown up. At least not in Ohio, it hasn't. Now, every neighborhood's different, right? There may be neighborhoods where it is, but overall, not seeing it. Would-be buyers are hesitant, partly due to high cost. The good news, costs are slowly coming down. House hunters are taking their time. Some would-be buyers are backing off entirely because of the economy remains uncertain. The economy is always uncertain. There hasn't been a week that I've done a Redfin update where the economy has been certain. It's always uncertain. It's either the bird flu, it's either COVID, it's either an election, it's either a war, civil unrest. It doesn't really matter. There's always uncertainty, right? The weekly average mortgage rate of 6.1% is near its lowest level in 3 years, but still double the pandemic era lows. And the median home sale price is $379,950, up 1.2% from a year ago. Median is the middle. It's not the average. A lot of people do not like median price analysis. It's probably not the best way to look at home prices. So I do have, when we review your individual markets, I will use zip code level data, not using median price. I'm not going to use median price when I do that. While costs are high, they're coming down and affordability is improving. The median monthly mortgage payment is $2,559, down 5% from a year ago, and wages are up roughly 4%. It's amazing. Like, one of the things we're seeing, I'm seeing it anyway in the data, is that, like, mortgage payments are getting cheaper because of rates coming down. Home prices aren't going up as much as wages now. So you're seeing wages go up 4%, prices go up 1.2% approximately. Meaning, and if you're in a market where prices are falling and wages are going up, even though we may not feel like they're going up, statistically they are, then that means affordability is improving. So if we run that for a long time, like a couple years, 3-4 years, maybe, then wages eventually will catch up in a lot of markets to home prices from an affordability end. That may happen. Let me know what you think. I'd love to know. Am I nuts? I may be nuts. But a lot of economists say that, and it can kind of make sense if you think about it. On the selling side, new listings rose 1.1% year over year, the third straight week increase after 2 straight months of declines. So we are seeing new listings now up, thank goodness, up year over year. They've been down. In other words, it's not seasonality. It's not delistings, folks. New listings are not delistings. New listings are people actually entering the market. putting their house on the market. So if there are fewer people putting their house on the market, or not a lot of people doing it, it's a sign that people don't need to sell. They may just want to sell. All right. Redfin premier agent Monica Di Sciano. Yeah, Di Sciano in Austin, home to the slowest housing market in the country, said she's hopeful in 2026 will be busier for both home buyers and sellers than last year. The local market is slowly returning to stability. January was pretty busy on the selling side, largely because homeowners have finally come to terms with slower demand and lower sale prices. Aha. Than we were seeing during the pandemic boom. No kidding. And house hunters who have disappeared are trickling back, but they're picky and they want perfection if they're shelling out for a 6% plus mortgage rate. Ben Ambrose, a Redfin premier agent in Milwaukee, where home prices are rising more than anywhere else in the country, also said he expects 2026 to become more balanced as time goes on, which with each passing month, I see more sellers willing to forego low rates and accept that it's time to move. That's leading to more inventory, which is helping attract buyers. I'm seeing a steady stream of house hunters touring homes, though they're taking their time, requesting inspections and negotiating with sellers. Okay. So there is going to come a time, basically, is what they're saying, at which sellers become anxious. Like, especially if they delisted last year, right? They're going to become anxious, probably, and become realistic and list their house, but for a price that somebody's actually going to pay rather than just hope and wish pricing, which is what we've seen, right? You see it in your neighborhood. Tell me if you've seen that. Houses go on the market at a price that you're like, what? There's no way that's going to work. And it doesn't. It sits on the market for a long time. You know your market, right? You know your neighborhood. You know where prices are. You're probably not shocked when you see a home sell, right? Because you're local. All right, let's look at the indicators of home buying demand and activity. These are like the top line metrics for the housing market nationally. Daily average 30-year fixed mortgage rate, 6.2%. Where is it today? Let's find out. According to Mortgage News Daily, that's what I usually use anyway. They came down a little bit yesterday, down at 6.17%. So over the last year, they have kind of trickled down, I think they got down to a low in the last few months of 5.99 when, Trump said he was going to buy a bunch of mortgage-backed securities. And they dropped, and now they've kind of gone back up a little bit. And the 10-year Treasury, if you've been paying attention to that, has definitely been continuing to kind of trend upwards. So it'll be interesting to see what happens with mortgage rates as we move through the year. But right now, I'm not seeing mortgage rates fall dramatically. I just don't think that's going to happen. Look at this. Last year, right now, like this time last year, mortgage rates were 7.05%. So, they've come down a lot. That's why the monthly payment has come down, even though prices overall in the U.S. haven't come down yet. Mortgage purchase applications. How many people are applying for mortgages? Well, 14% fewer people applying for mortgages than a week ago, and they're up only 4% year over year. So buying demand is not exponentially higher right now. It's just not. Redfin Home Buyer Demand Index, I'm not going to pay attention to that. It's kind of their algorithm stuff. But let's look at the Google searches of homes for sale. That's the highest level since August, they're saying. Okay. Up about 15% year over year. To me, that's a good indicator because it's raw. It's how many people are searching home for sale. That it's in itself, I think, is a good indicator of activity because it's not an algorithm from a standpoint that Redfin's not manipulating that number. It's straight from Google. So I would think more people searching home for sale means there's more demand on the sideline. We're just not seeing it come through in the housing market, though. Like, you're not seeing it trickle through to sales. And again, I think I know why. I'll get to that in a minute. Key housing data, though. Let's look at the top 400 metros. This tells us, hey, this is what's happening overall, housing nerds, with the top line numbers of prices and inventory and whatnot. Median sale price, that's the house in the middle that sells. The house in the middle. If 100 houses sell, it's number 50. How much is that home? $379,000, basically 380 grand. That's up 1.2% year over year. It still has not fallen under last year. Lots of analysts were thinking as we go through 2026, we would see lower home prices on a year over year basis nationally. Like this number would eventually fall underneath last year, which would really be the first time that's happened in years, right? In several years. So far, it hasn't. We have not seen it come underneath the previous year. Median asking price. How much are people asking for homes? $405,000. That's up 1.4%. That hasn't crashed either. Median monthly mortgage payment. We already looked at that. $2,560, down 5% from last year. That's pretty meaningful. Not because of prices, but because of rates. But if you live in a market where prices are coming down, because there are markets like that, then you're getting a much better payment. Pending sales, 66,248. That's down 3.3%. New listings, 78,159. So when you look at that, it's like we added more listings, basically added more listings than we took away, right? Because you got 78,000 versus 66,000. Not a ton more, but more. Look at active listings, though. This is a big problem. Big problem. Huge problem right now. Like it's a big problem if you're bullish. It's a big problem if you're a crash bro. Because for the first time since I can remember, we have fewer homes for sale versus last year, versus the previous year. So if this is not seasonality, people will be like, oh, this is because of seasonality. Not seasonality, because I'm comparing last year, same time, February, right? Early February compared to early February this year, down 0.1%. I mean, essentially it's flat, right? I mean, you could consider it flat, but that's the first decline technically since 2023. So it's just startling that there are fewer homes on the market. Now, a lot of people will say, well, that's delisted homes, right? Rage quitting. By the way, I did an interview. Shout out to Mr. John Brooks. I did an email with John Brooks. He has a YouTube channel and in Florida. And I did a video with him. It's with the editors right now. So I'll put that out here soon. And we had a great conversation. And we talked a lot about delisting homes, like homes that are coming off the market because sellers are rage quitting, right? That whole term that he basically coined. I told him to copyright. I was like, you should copyright that term. It's all over the place. People are using it. But yeah, I mean, there are people that are removing their home from the market because they're like, I'm not getting the price I want. But here's the thing. And you have to pay attention to this part. If they remove their home from the market and take their toys and go home, right? They don't want to play in the sandbox anymore. And they're not leaving it on the market at a lower price. It usually means they don't need to sell the property. They may want to sell it to buy something else, to do something with the money, but they don't need to sell. If they need to sell, they're not going to take it off the market. And it's not going to be in shadow inventory. They're not going to hide the listing. People who need to sell need to sell. They're going to drop flyers from airplanes to get people to see their house. But right now, nationally, fewer active homes on the market. Crazy. Months of supply, 5.4. That is up 0.2 points. Basically means right now, Redfin is saying we have a balanced market. But this is a general indicator that we have a balanced market, being 5.4 months of supply. Share of homes off the market in 2 weeks or less, 27%. That's down from 28%. There's that median days on market, 64 days. That's up 6 days. Longest in 6 years. People look at that and the fact that we're growing months of supply and they go, well, then the market has to fall, right? The problem is, I think a lot of these houses out there, and y'all tell me what you think, but I think a lot of these homes out there are not homes people want to live in for whatever reason, or they're priced too high. So they sit. And that's a sign to me that people aren't desperate to sell. Otherwise, you would see price, like you would see more sales and more listings because there would be buyers to pick up the homes at huge discounts if people were desperate to sell. Like, I got to sell this home or I'm going to be ruined next month. Like, I'm not going to eat unless I sell this property. We're just not seeing that yet. It could change, but right now I'm not seeing it in the numbers. Share of homes sold above list price, 19%. So 19%, and this has definitely come down. It's weird. They say 19.2%, but it's down from 19%. They must have messed that. It must be a typo. But share of homes sold above list price, 19%, basically means 19% of people are still paying over asking for houses. Average sale to list price ratio, buyers are getting basically like a 2.3% discount on homes. But at least it's not over 100. There was a point at which a few years ago, this was over 100. So people on average were paying more than the home was listed for. Nuts. All right, let's do the metro level look. This is just they look at the top 50 metros in the US and then the top, the winners and losers in a couple different categories. So median sale price, where are home prices accelerating the fastest? This is no surprise at all. Milwaukee, Philadelphia, Cleveland, Warren, Michigan, and Columbus, Ohio, where I am. Home prices are still going up. Fort Lauderdale, San Jose, Portland, San Antonio, and Riverside are where home prices are falling the fastest. This is another big warning sign for me, a trouble for the spring market, is that median sale price only declined in 15 of the top 50 U.S. metros. Last week, I think this was 18. So like the trend is not going towards more metros have declining prices. It's like stuck where you've got 35 of the top 50 metros with prices going up, not down. So the median sale price only declined in 15 of the top 50 metros. Pending sales, where are homes going into contract the most? Where are buyers most active compared to last year? Remember, just the top 50 metros they're looking at. West Palm Beach, Jacksonville, Columbus, where I am, Austin, Virginia Beach, Virginia. Where are sales the slowest? San Fran, Oakland, Minneapolis, San Jose, and Seattle. I mean, some of those are big, right? San Francisco down 21% in pending sales. Geez. New listings. This part's nuts. San Jose, Phoenix, Cincinnati, Baltimore, and Washington, D.C. all have they have the largest growth of new listings year over year. So more sellers are putting their houses on the market in San Jose, Phoenix, Cincinnati, Baltimore, and Washington, D.C. In Fort Lauderdale, Nashville, Dallas, Fort Worth, and Jacksonville, that's where sellers are retreating. They're not putting their houses on the market as much. That tells me there's not as much pain as people have projected or have hoped and wished and wanted that there would be pain. People would be bleeding in the streets because they couldn't sell their homes, and they had to sell their homes, I guess. In like Nashville, that was supposed to be a big crash city. Dallas, big crash city. Fort Worth, basically the same market. Crash city. Jacksonville, what? And so I asked John Brooks about this because he's a realtor in Florida. He's in Jacksonville, actually. I asked him, I was like, what's up with these new listings? Like, your new listings are down a lot. To be fair, John's local, and I understand that. He didn't have an explanation except to say that he kind of blamed the data a little bit, but I think, kind of like used like the whole, that data is old type attitude. But this data I'm looking at is from the last week. It's pretty new. And just sellers in Jacksonville just obviously don't need to sell. There's not a lot of them compared to last year. So that's what's happening with new listings, the national outlook, all that stuff. Now, I'm going to look at some comments for a couple minutes. Then I'm going to get to this article that I think explains why we're seeing this locked up housing market. And then we will get to the markets that you want me to review. And that's the most important part, I think, for you anyway. So let me just look at a couple comments and then we'll look at that article. Hey, thanks, Evil Overlord. I appreciate it. Yeah, Portage County. I'll look at that when I review some markets. You got a question. What's your question here? Do you think a lot of outside investors will come into the Ohio market if we eliminate property taxes? My instinct tells me yes. Eh, Only because, well, because I look at deals every day as an investor, and I can tell you that property taxes kill every deal. It's also the number one reason why I raise my rent is because of property taxes. Like I just got my bills, or I just had to. Where are they? I got them all over the place here. I'm covered in bills. So I got my bills, my property tax bills, right here. Um, I hope every day they go away, but they don't. And I do think investors will load back in, or load in even more. Um, I mean, in a weird way, property taxes may be like a governor of investor demand. It could be because it keeps investors out, right? Because it makes it the math doesn't make sense. It also is a good motivator not to have a vacant property because your holding costs are high, right? As a landlord myself, if I have a vacant property, it crushes you. Like if you miss 1 month of rent as a landlord and your rent's $1,200 a month, then, and let's say you're used to making, let's say $200 on that unit a month. If you miss 1 month of rent, that's a big deal. So taxes are a motivator to keep the units filled. But then, the other side of it, evil, is that maybe there's something I'm not seeing with taxes, with property taxes, where like if they're eliminated, something else comes in to replace that revenue that makes it more difficult on investors. I don't know. I think it's one of those unintended, unknown consequences of removing property tax. And by the way, I hate property tax, but you you got to be practical about it too. You can't just be like, "Oh, who cares?" Because there may be consequences. And do you think they'll cause another spike in prices? I think removing property tax will cause prices to go up. I mean, it'll make it a lot easier on buyers to buy. I mean, their monthly budget will immediately improve, even though they're going to pay for it somehow, right? So if they pay for it in sales tax, it just won't feel the same because they're going to qualify for more as a on their mortgage, right? They qualify for another, could be another several $100s a month, maybe 1,000 a month that they can qualify for. That makes you that allows you to buy much more house, even though it's a kind of a false feeling because you're having to pay the taxes anyway. Anyway, that was a great question. Housing reset will be lower rates when Powell is gone. Yeah, that's gonna be a mystery, man. I don't know. I don't know if they're gonna bring rate. I don't know. I don't know how they're gonna get rates down. I mean, the only way to really get rates down is to maybe allow banks, to deregulate banks, allow them to put treasuries on their balance sheet. Maybe they could do that. But the bond market does not like it when the Fed artificially lowers rates. Why is that you need more sales to see more price cuts? That's a great question. So you need more sales because you got to have price discovery. I know that's a stupid word. It's a stupid term. I get it. It's cheesy. But that's what it's called. So so a great example is if I go into a neighborhood and I list a home for a client, I'm looking for comparable sales, right? Of stuff that's closed in order to price the home correctly. If there are no sales that have happened, I don't know. Pricing the home is more difficult. But if you have a lot of transactions, normally that means there's a lot more homes on the market, and so competition helps bring down prices. But as you have more closed transactions from those, from the transactions increasing, then you'll be able to use those as comparable sales, and it allows people to discover the pricing. Like, oh, we haven't seen a closed sale in this neighborhood in 2 years. Now there's 5, and they all sold in different price points, but they're not all higher. Oh, now we price the home, so it sells, and the buyer's more aware. It's like price awareness, if that makes sense. And so you need more transactions to bring home prices down. You just do. It's like the data needs to feed into the system so the average person starts to see those discounts. Yeah, smash the thumbs up. I appreciate it. Thank you. Thank you. Uh, I think you said it last week where the mainstream outlets would blame the weather on slow sales. I literally saw an article saying that. Yeah. Yeah. I mean, it's always cold in Ohio in the winter, you know? And I'm sure if like, if you look at well, we had a lot of snow in the last couple of weeks in Ohio. So in the Midwest, right? We had a lot of snow, more than usual. So that's going to kill demand. It's going to kill activity. It is also going to kill people from listing their house. I think it's hard to tell what's happening because the South and Midwest are so different. Yeah, they are. No doubt about me. Yeah, I did that video with John Brooks, and the difference in Florida and Ohio. We compared the two states. It's crazy the difference. Wait till that video comes out. It was nuts. These numbers don't really help unless you break them into regions. Yeah, well, so we can break them into regions if you wanted to, but we'll go to different markets here in a few minutes. I just like doing the national look, just to kind of get a sense of what's happening overall. Only thing major crashing right now is Bitcoin. Yeah. And silver and gold haven't been doing very well either. I love how the Crash Bros call it rage quitting, like sellers are emotional. Well, so to be fair, there are sellers that are emotional. And they would be emotional if they're expecting to get a price that is not real. A lot of people are proud of their house. And when you're proud of something, it's emotional. I mean, as pragmatic and data driven as I am, when I sell a flip or I go get a refinance on a rental and the values come back, or I list a flip and it doesn't get the traction I want, I get emotional. And I'm like, dang it, you know? It's easy to get emotional about your own property. It just is. It's because it's yours. So I think there's something to be said for the rage quitting thing. But it's not it's a good tagline for Crash Bros, right? It is. And the funny thing is I wouldn't consider John a crash bro after talking to him. You guys have to let me know what you think. Right. There's a difference between crashing out and opting out. Right. Yeah, too much liquidity in homes and 401ks that help can borrow against to stay afloat. Um, there's a lot of cash out there. I was just talking to somebody right before this live about this because we're not seeing the opportunities here locally that we thought we would. It's almost like, God, there's just tons of cash. The only thing I can figure, right? There's something that goes along with that. I'll get to in a minute. Again, I think I found out why we're seeing the market just locked up. Yeah, equity, right? We have plenty of terrible houses, dirty or scummy, just sitting way above where they should be. Multiple relistings too. The terrible flips are sitting overpriced as well in the Detroit area. I bet. I bet. Yeah, so that's the thing, right? Like if you have if half the inventory is not good, well, has that changed prices? Has that lowered home prices by having a lot of bad inventory out there? That's a rhetorical question. Obviously, it hasn't. And it flies in the face of what most people would assume would happen with the housing market, right? Oh, a lot of listings, you're going to have a crash. Well, depends what those listings are. If they're junk and people want good homes, the junk is like almost like doesn't count. It's inconsequential. Zip, zero, zilch. Yep, people. Okay. Oh, you're answering somebody. My bad. Pocket Watchdog, nowhere near 2010, 2012 days. Not even close. Not even close. What's up? Ran info 9064. Honestly, I'm shocked. I see people paying 650 plus and seeing more and more foreigners. I think there is some government funny biz. I mean, maybe, but again, like you need to look. I'm going to show you this article in a minute. Where will the cities get the money? Oh, sorry. How can I find out if a home just sold for in Texas? Well, yeah, they don't have public info. So, well, if you give me the address, I can put it in to PropStream, and we can maybe pull it up. I use a program called PropStream, PROP Stream, and it has data for Texas, as far as I know. Even if you put it in Zillow, doesn't it come up? Maybe not. You could call a realtor too. Yep. Yep. Great point. You could call a realtor and I'm sorry. You know what? I always ask this, but what's your real name? AZ House Sells. AZ House Sella. I don't know. I'm trying to pronounce this YouTube handle, but what's your? I can't remember your real name. It's for some reason. I think I asked you this last week, but yeah, call a realtor, Anthony. That would help in Texas. Lisa, maybe I'll remember it again, Lisa, or for next time. Okay, thank you, Lisa. Yeah, call a realtor. I should have mentioned that. AZ House Seller. Ah, right. Got it. All right. Let me show you this article because I think this, and then we'll review your local markets. I think this is what's going on. It's not surprising. It's really not. This is okay. This is from Resi Club Analytics. Now, this is their. You have to be a member or a paid subscriber to get this article, so I can't share the link. Although, if you're looking for the best real estate data on the planet, the best real estate articles, Resi Club is by far the best that I've found. And I don't get paid by them. I make nothing if you go to them and pay for their subscription. But this article, I think, explains exactly what's happening. Housing's quiet shock absorber. U.S. homeowners at large have a giant equity buffer this cycle. And so I think Pocket Watchdog mentioned it just a few minutes ago. But I am seeing this overall. I think, this is, you can't discount this. If you're out there hoping and wishing and wanting for a housing market crash, you think it's all fraud, greed, and corruption, or you think, the great reset is coming, right? The job market's going to fall apart. Whatever you think, you have to take this into account. If you're a Melody Wright disciple and you follow her everywhere on YouTube, and you're like, she tells the truth, fine. Believe in what she says, but take this into account. And we're seeing it play out, because if we weren't seeing it play out, folks, you'd see a lot more homes on the market and a lot lower prices. Math matters, right? So check this out. American homeowners are sitting on an unusually large equity cushion. And the latest mortgage data makes that clear. As of Q3 2025, 76.7% of all U.S. mortgages have a loan-to-value ratio of 60% or less, according to the FHFA. Loan-to-value measures the size of a mortgage relative to the home's current value, calculated as the outstanding mortgage balance divided by the estimated home value. By the way, if you're joining us, put your zip code in. I will get to your individual markets here in a few minutes. I just want to cover this article first. And hit the like button and share the video and subscribe. All right. The lower the ratio, the more equity a homeowner has. Put differently, the typical U.S. homeowner has a big equity buffer. And the title of this article is exactly what I think is going on. Housing's quiet shock absorber. It's a shock absorber to the system. And we did not have this leading up to the GFC. Go look up the data yourself. I don't know what the loan to value ratio was. Maybe they say in this article, I can't remember, but at the end of the day, that's a shock absorber, because if you have a lot of equity, you don't need to sell your home. You're not desperate necessarily. A 60% loan to value on a $400,000 home, for example, that would mean about $240,000 owed and $160,000 in equity. So it's, 160 grand is, basically what you walk away from, or you walk away with, right? If you sell, right? Because, there's selling cost involved, but let's say you didn't have any selling cost. You have to pay the bank 240 in this example. You get the 160 if you sold it for 400,000. And then they break it down here. Look at this. Look at this breakdown. I mean, this is again unbelievable data. So yeah, 76%, the big chunk, has a loan to value ratio of 60% or less. Look at I guess it would be the worst, right? 91% to 100% loan to value is only 3.6% of all mortgage holders. 81 to 90, 4.6%, 71 to 80, 6.4, 61 to 70, 8.5. So the biggest chunk is underneath 60%, right? For many borrowers, this reflects a combination of years of home price appreciation, mortgage paydowns, and pandemic era refinancing that locked in low rates. That's that lock-in effect, and accelerated principal payoff. Even after the housing market cooled and price growth slowed or reversed in some regional markets like Florida, Texas, Colorado, right? Even Arizona, even Vegas, right? We saw some price declines there. Most homeowners remain far from being highly leveraged, with only a small share of mortgages sitting above 80% loan to value and only a small slice underwater. Underwater meaning that your home is worth less than you owe on it. So if you sold, you have to bring money to closing. That'll wreck a housing market, and that creates forced selling. Lower equity creates forced selling because people were like, okay, I owe a ton of money on this mortgage. I can't get any more for my house. I'm not going to delist it. I'm going to basically have to short sell it, right? In the early 2010s, this is big. Pay attention. In the early 2010s, coming out of the Great Recession, a housing crash, a much larger portion of borrowers sat in the higher LTV brackets, including above 80% and even underwater. Oh, they tell us right here, kind of. So yeah, look at this. Back in 2013, less than 40% of all homeowners were like, I guess probably like what, maybe 35%? 35% of all homeowners had a loan to value ratio less than 60%. In plain English, that means when we were coming out of the great financial crisis and during that last housing crash that was so devastating to many people, overall, there was a much smaller portion of people with a lot of equity. And there was a much larger portion of people with low equity. So like in the 100 bracket, over 100% of loan to value. Right now, it's like nothing, right? A couple percentage points. Back in 2013, and this is coming out of the GFC, by the way, it was like what, 10% maybe, which is a big difference. So the point of this chart and so far in the article is most homeowners don't need to sell. They're just not in a financial bind. And if they do sell, they're going to walk away with a lot of profit of equity. It may not be profit necessarily, but equity, even if they have to discount their price. So if they needed to sell and they had all this room, wouldn't they drop their price more to a point that they can sell it? Oh, obviously they would. That's why they don't need to sell, most people. All right. This other chart, though, is insane. Ready for this? Of course, the analysis above looks at only U.S. mortgage holders. Many homeowners have no mortgage at all. Indeed, among owner occupants, 40% are mortgage free. So in 2010, it was 32.8%. And as you can see from this chart, it's gone up over time. And so now, what's crazy is that now more than ever, there are more homeowners now that have paid off their home completely than ever. So, I mean, this is nuts. But even in the last few years, from 2022 to 2023 to 2024, it grew a full percentage point. So when you think about all the houses in the US, 40% of those have no mortgage at all. Take them off the map. No mortgage at all. And taxes and insurance can go up still for mortgage-free homeowners. But if you don't have a mortgage, you get a lot more cushion, right? I know at least 3 homeowners I've talked to in the last month that are making their final mortgage payments this year on their houses. So there are a lot of people paying off their mortgages. So when you take all the houses in the US, you take this thing and go, oh, 40% have no mortgage at all. And of the people that have the mortgage, of the last, the 60% of homeowners that actually have a mortgage, 60% of those people have a ton of equity. I'm sorry, 76% of those people have a ton of equity. So you're left with like a very small portion of homeowners that are like, I have a mortgage and it's a lot higher than my value. I have to short sell it. I'll get foreclosed on. And that's why the distress is not there. It is what it is, folks. This is what's going on. This is why the market's locked up. This is why there's not a lot of people putting their house on the market to sell because they don't need to. And because of that, there's not a lot of sales because there's not a lot to choose from. So we need more inventory to hit the street. And time may be the only answer for that. That's my that's why I think we're seeing all this take place. All right. And that's going to make a lot of people frustrated. Like a lot of people look at this and they get frustrated, they get angry. They're like, dang it. I don't like this info housing nerd. And I get it. You may not like it. Take your frustration out on me. Tell me how much you don't like it. I understand. It may not be going your way. But if you're waiting for some kind of like apocalyptic event horizon, I mean, it would have to be something very odd, I would think. Things could change, but man, I look at this data and I go, "Sheesh, this is mind blowing." And this is national, so locally it could be much different. All right, let's get to your markets. Market time. Now I use Resi Club Analytics for this. I don't use median sale price, and I go down to zip code level. So let's get started. There was a first one. I've got Portage County, Ohio. Now, Evil Overlord, we already reviewed this last week for you, I think, and it hasn't really changed. So what I'll do is I will actually go to Redfin data, and because that's updated, and I know you've been on, so you understand what I'm doing here. I don't want to they just give you the same data. So let's look at new listings in Portage County. And this is more updated than Resi Club, but I lean on Resi Club more uh, because Redfin data, the weekly data sometimes can get skewed. So, but anyway, long story short, we're gonna use the Redfin stuff. All right. So new listings are up 30% where you are right now in Portage County, but there's only 21 new listings, which is nothing, right? Pending sales, what are they doing? Whoops. Pending sales are down 6%. Fewer people buying. You've got more people putting their house on the market, but you only have 21 units. So, and in fact, what's crazy is you actually sold more than you added. You sold 23 houses and you added what? 21. So you actually lost inventory, even though, pending sales is down. Active inventory. Look at this thing fall. Active inventory is up 17% right now, year over year, 243 homes. Yeah, it's not get median price now. Where is it? Median price, median sale price. Yeah, median sale price. Up 18%, $276,000. I don't see anything in this data that tells me, Evil, that things are going to change. Like I would expect home prices to keep going up there because inventory is not fantastic. Just, I mean, in the whole county, you got 21 new listings. That's not going to do it. And it could be that, you see a trend like this for a long time. All right. So that's Portage County. Let's Ohio. Now let me go back to the live. Who else has one? Yeah, going back to your yeah, by the way, Pocket Watchdog or Packet Watchdog. I don't know why I call it Pocket. Packet Watchdog, exactly right. Yeah, you called it. Equity. Prescott is gorgeous. I wish you luck. Take your time and get an excellent realtor. Oh, I'm talking to somebody. Anybody want to see one? Josh Hall. What's up? Citrus Heights, California, or Orangevale, California. 95610. Yes, sir. Let's take a look at that. 95610. I type like an old man. I'm like 95610. I mean, I'm not a spring chicken, but zoom in here. Let me zoom out for a second and look at what's going on. Where is that exactly again? So that's like, uh, that's Sacramento. It's like east. Wait, let me say this. That's like east of the Bay Area. So is that Modesto? I don't know. I don't know where that is exactly. It's like outside of Oakland, right? 95610. Let me just double check that zip, make sure I'm right. Yeah. It's Citrus Heights, California. Okay. So price is there, not median. This is the typical value. And that typical value is between the 35th and 65th percentile of homes. So it takes out all the most expensive homes. People don't seem to understand that in my comments. Maybe they're just toying with me. They're like, no, you're using median. I'm not using median. So home prices, they're down 1.8% year over year. So they're down year over year. That's good. Let's see what they've done since 2022. Since 2022, they're down 5%. And the typical home value is now $502,000. That's not an all-time high. It peaked at 512 approximately. So not at the peak. Let's look at inventory. Active inventory for sale. You're up 10% year over year. 10% more homes than last year on the market. If I compare it though to pre-COVID, you're up 32%. So a lot more homes than pre-COVID, which is great if you're looking for inventory. Right now you got 45 homes for sale. Last year 41. During COVID you had 21 houses on the market. So you definitely have more homes than you had during COVID, and you have more homes than you had before COVID. But prices, they have come down a little bit. Let me look. I'll do one more thing here. I'll look at let's look at new listings. So here's maybe where the danger is. New listings right now are flat year over year, and new listing count. Yeah, like you're just not. I mean, you're adding basically the same amount of listings that you did last year. So sellers added 12, and this is to the end of December is how they do this. This is a monthly look, not a weekly look. But in any case, looks like you just need more homes for sale to keep getting prices lower. So it doesn't look like prices are crashing. Doesn't look like that, but they're not skyrocketing anymore. Thank goodness. So that is going on in Citrus Heights. 95610. Hope that helped. And thanks for coming on. Let's see who else has one. I'm just looking for somebody's. Anybody have one? Anybody have one? Anybody have one? Nobody else has one, huh? That's it. That's it. Oh, I got one right here. You guys are taking it easy on me today. But I have a bunch from comments that I can go through if needed. 3601 Plum Creek. Oh, you have a property. Oops, what's this? 3601 Plum Creek. Okay, I can look that up. $3,601 Plum Creek Court. All right, let's look at this one. Oh, this one's sold. Price unknown. Ah, I see what you're saying. Okay, let's try just for S and Gs. Let's try PropStream and see if we can find it. PropStream sometimes takes forever to log into. All right, so this is PropStream. This is a paid service. It's like $120 a month. It's the same thing if you heard Melody Ray talk about Property Radar. This is the exact same thing. I just like it better than Property Radar. So, and I use it to find opportunities. So this one, it's kind of like the MLS in a way because it has a lot of properties that the MLS even sometimes doesn't have. Okay, so yeah, it actually tells us what happened, even in a non-disclosure state, by the way, which is really nice. So it looks like $745,000 was the list price. This says it's on market, but on Zillow, it's saying it closed. So MLS details says pending 745. So I don't know where it closed at, honestly. We may have to wait. But you could just call a realtor locally there and ask too. It wouldn't shock me though if it sold for near 745. That's what's going on with that one. All right. That was kind of a detour, but I thought it'd be good to review an actual property. Let's see. Anyone else have one? You may have to throw it up again if you do want me to review a market because I may not be able to do. Zero 07960. Somebody asked for that one, which is New Jersey. Let's do. All right. This is Morristown, New Jersey. Morris County, New Jersey. Yeah. And Morristown area. This is probably completely different than what we just saw in California. Price is up 4.3% there. Okay. Let's do prices from the peak 19% up since the peak. Wow. Typical value, all-time high at $901,000. Geez, all-time record high there in home prices. Active inventory, let's just look at since 2019, down 82%. Inventory in 07960 New Jersey, down 81.7% since 2019. There's no hope of prices going down there. There's no hope. I mean, you can't, there's no inventory. That's insane. And it's probably just not, I mean, that's basically the more the story with that market, whoever requested that is that it's you're going to have prices higher for longer unless something drastically changes with inventory. In fact, let's look at inventory and see what's going on in the area. Yeah, look at this zip code. It's down 80%. The zip code next to it, 07945 in New Jersey, down 75%. And look as I zoom out of New Jersey. Look at this. The entire state is basically brown. I mean, there's some little tiny pockets of green here where we have more inventory than 2019. Just a couple. Just a couple. I mean, inventory is going to tell the truth before prices do. It always does. It always does. And people who tell you inventory is not important, it must not be going the way they want it to. I'm not going to do that to you. I'm going to tell you what's going on. I'm just going to show you the data. It is what it is. I mean, there's like what, 1, 2, 3, 4, 5, maybe 6, 7 zip codes out of all of New Jersey where you have more inventory than 2019. I mean, it's crazy. There's just nothing for sale there. Now, let's look at prices and see what they've done in New Jersey. This is just year over year. So if they were red, that would mean they're down. Blue or yellow means they're basically up. So like in that area we just looked at, yeah, you've got prices up 9%, 4%, 5%, 4%. There's not a lot of zip codes that are down year over year in prices. One zip code down here, 08349 in New Jersey, wherever that is, southern New Jersey, that's down somewhat. But for the most part, New Jersey's up. Nuts. And we look at a county look, it probably doesn't look much better, I'm guessing. Yeah, look at the county look. There's not a county in New Jersey with lower prices than last year. Jeez. Oops. That's unbelievable. Okay, that is New Jersey. I got another one here to do. Oh, 08822 in New Jersey. Somebody wanted me to look at that since I'm out here. Zero. I think it's important if you want to pay attention to the housing market to look at these different areas. Because when you hear people say, hey, housing market's crashing, you can go, well, not everywhere. And people say, hey, housing's always up. You can say, well, not everywhere. So that zip code 08822 is Hunterdon County, New Jersey. Low inventory makes numbers crazy. All right. Prices are up there 4%. Let's look at the typical value in a house. $657,000. Jeez. All-time record high price. Active inventory year over year, up 17%. That's good. Thank goodness, right? To get some inventory. But look at this. Since 2019, homes for sale down 74%. They have nothing. Nothing. Look at this trend. They only have 34 houses on the market right now. Before COVID, they had 132. Yeah, not going to find a lot of discounts when that happens. Sellers are like, why would I have to discount my property? I don't need to. Just think about that for a second. In that same zip code, before COVID, there were 132 homes on the market in December of 2019. Now, there are 34. As a buyer, what are you going to do? I mean, how do you manage that? You're like, well, there must be anything remotely priced reasonably or decent is probably gone in a day. I wonder what median days on market is. 52. Well, this guy said, the guy who commented on this on my channel said that there were $10 and $20 million estates there. So maybe that's what's going on. A lot of expensive houses sitting. Jeez. Boy, that's depressing. Okay, let's go to the next one. You guys have another one for me? I got a ton of them here. Let's do one. How about this one? 34787, which is Disney World. in Orlando. Let's do Disney World. Completely different, right? Look at this market. 34787 in Orlando, Central Florida, kind of right. Down 4%. Home prices down 4%. Not up 4% like we saw in New Jersey. Home prices since 2022 are down 2%. They're basically, down a couple percentage points in the last couple years. Since 2020, home prices there, though, are still up 50%. That's the crazy part, right? Home are still 50% more expensive now versus 2020. Let's look at the typical value. That is now $573,000. Not an all-time high at all. You had hit an all-time high back here at like what, 603. What about inventory count? Yeah, completely different. If you're a housing nerd, this makes you perk up, right? 588 homes on the market in that zip code. It's probably a really popular zip code with a lot of houses. That makes sense. But this chart is flip-flopped from New Jersey. I mean, you only had 385 homes on the market in December of 2019 in Orlando, and then the inventory exploded. And what happened to prices? They fell, and fell a lot. So that's Orlando. Let me do Lisa's since I butchered her name. Let's do. Let me look at. 86401. I was going to do Kingman, Arizona. Yeah. And we'll do the areas around it, Lisa. If you're still on, I don't know if you are. But Lisa is a realtor in Kingman, Arizona, Lake Havasu area. So if you're looking for a house in Kingman, give Lisa a call. 1.4% home prices up there. Just 1.4%. They've kind of been flat, right? The growth has kind of been flat, but it hasn't crashed, it doesn't look like. I mean, the growth has crashed, but the prices haven't. Let's look at since 2022, what is it doing? Down 3.6%. Down 3.6% since 2022. So it's not a crash, but your prices aren't growing anymore. Let's look at the value. What's the value? Yeah, it's just kind of held steady, right? You peaked back in 2022 at 290. Now you're at 279,000 for the typical house. That seems awfully inexpensive. Inventory. 162 homes on the market right now. During COVID, you had 54. Before COVID, you had 124. So definitely more inventory. Let me see if you've chimed in at all. I'm just curious. No. All right. Well, I'm doing this because, just trying to see what's going on in your market. What about the markets around it? What's happening? 86438 since 2022, up 2.9%. So this market's actually up 2.9. Just south of that first zip code I mentioned in Kingman, Arizona. Yeah, now it's 205,000 is the typical value. That seems cheap. Let me do this. Let me look at the typical value. And maybe, I don't know, it looks like it gets more expensive as you go closer to the border, like 499 down here in 86404 zip code down in South. I guess that's Southwest Kingman. Then it gets even more, but still expensive in 86406, 487 grand. But that's what's happening in Kingman. It looks like there's a lot of inventory, maybe an opportunity out there if you're looking for a second house. Kingman's beautiful. Lake Havasu is amazing. All right. Oh, you got one for fun, huh? 86303. South Prescott, 86303. Okay, let's find out where that is. Whoops. What's going on there? Typical value $590,000 in Prescott, Arizona. Let's do home price year over year. What do we got? Down 1.2%. Okay. Typical. Oh, we did typical value already. Active inventory versus 2019, up 38% in Prescott. Got a lot more inventory. And look at the active inventory count, 144 homes right now. During COVID, you had 38. Before that, you had 104 before COVID. So you got a lot more homes on the market. Yeah, I would think a market like this is definitely going to struggle, right, with prices for a while. Like when I say struggle, I mean it's not going to grow exponentially because of the inventory. But it doesn't mean it's going to crash. Again, I wonder what the sales are. I don't really have sales on this in this data. I mean, I do, but they're not dialed in. I've complained to Lance about it a few times. We do have pending sales, pending listings. Let me see if that will come in. Yeah, 38 pending sales in the month. That's it. Well, 100 and some on the market. About the same number of pending sales they had last year and the year before that and the year before that, but a lot slower than 2021, 2020. So fewer transactions. Hmm. All right. That's Prescott. Hmm. Let's see what else you got. Oh, I'm going to go back to this though. You're trying to buy in that neighborhood in Texas that we reviewed. I think that's what you're saying. I mean, it looks like that house sold, but according to Zillow, so you just have to track it, right? You could go to PropStream. They'll give you a 7-day trial if you go to PropStream. So you could like wait a while till it records, maybe wait a month or so, and then you could dive in and see it. But PropStream may be a good opportunity for you to, or maybe a good idea to get, just because you can cancel it at any time, and then use it while you're hunting for a house because it tells you data obviously you can't get in your on Zillow. Locked up Larry, what's up? Nothing if off is off, I guess, except the price to wage gap. You also have to consider the cost of everything. That's true in one's life. Childcare and insurance alone puts cost into uncharted territory. Yeah, man, childcare is ridiculous. I don't pay for it anymore. My kid's grown more grown, but yeah, that's insurance and childcare is nothing to joke about. Same with property taxes, right? Um, and that price to wage gap, it the stats say it's closing. That's what the stats are saying. I don't know if that's true, but it doesn't feel like it for a lot of people. But anyway, thanks, Larry, for joining us. I appreciate it. And I appreciate your outlook, and what you have to, your even if it's different than mine. What's up, Michael? Who wants a house now with property tax payment as much as a house payment? I mean, it just depends on your situation, right? Compared to what, right? If you're paying a lot for rent where you are already, some people want a house and they're like, oh, it makes more sense for me to buy a house. Some people just want a house. But you got to consider everything, including taxes and insurance. You're right. But I get the attitude like, hey, what the heck? Why even deal with it with these property tax payments? I mean, again, I got my taxes right here. They're due in what's today? The 6th, the 5th. They're due in 8 days. I'll pay them at midnight. Well, 11:55 p.m. to avoid a penalty. Ohio to AC Singer home almost 5K a year. I don't know what that means. AC Singer home. I don't know what that means. All right, I'm gonna do one more zip code here. just for fun. I got a lot of them to choose from. I just want to pick an interesting one. Let's do Eugene, Springfield, Los Angeles. Oh, yeah, let's do this. 91208. Let's do 91208, which is Glendale, California. 91208. Glendale, California. What's happening in Glendale? Oh, man. Home prices there are down 0.09% right now. And the typical value, not median, Larry, typical value, $1,520,000. Goodness gracious. That is that an all-time high? No, not an all-time high, but close. I mean, you're within $15,000 of an all-time high. Inventory in Glendale, flat for the year. Active inventory since 2019, before COVID. The more this is up versus COVID, the more price declines we see overall. Well, you're up 7% versus COVID, versus pre-COVID levels of inventory in Glendale. 14 homes on the market right now, not a lot at all. 7 during COVID, only a handful before that, so you just don't have a lot of inventory, huh? But you're not seeing a lot of price decline either. Not anymore. There was another one they asked for, though. Burbank 91504. So we'll go to Burbank, California now, which is kind of in that area. Down 3% year over year, home prices. And typical value, $1,291,000, not an all-time high. That was earlier. That was in December or so of 2024, where it peaked at 1,326,000. Inventory since 2019 is up 18%. How many homes do you have on the market? 26 houses on the market in that zip code. In what's that? It's Burbank. Yeah. In Burbank, you've got 26 homes, and during COVID, you went all the way down to 6 homes. Yikes. Yeah. So just not a lot of properties on the market overall, right? I mean, 26 homes isn't a lot, but it's enough to cause, prices have started to come down there, it looks like. Let me look at this again. I mean, I guess they've come down. They peaked at 1,326,000, now 1,291,000. So they're still elevated, compared to pre-COVID. Like if I would look at pre-COVID levels of prices. Hmm, why can't I see that? Why isn't it telling me that? Oh, here it is. They're up 41% since COVID. By the way, just because we have time, because nobody else is really asking for one, which is fine. I don't want to do it just to do it. But if you look at the values in the US since 2020, home prices, how have they shifted? And I look by state. Check this out. So this is how much home prices have increased by state since March of 2020, right when COVID hit, right? Essentially. So like in Texas, home prices are up 34.6%. Where I live in Ohio, in Florida, they're up 47%. California, we were just looking at that market, up 37.7. The point is that the the narrative that home prices are up 100% since COVID, obviously everything's hyper local, but overall, no, they're really not when you look at the states. But the Midwest, though, there's a lot of areas that are up, Ohio 52, Indiana 53, Michigan 46. Up in the Northeast are up a lot, right? Maine 64, New Hampshire 69, New Jersey 56, and even some of the South. I mean, look at Georgia 52%. So Louisiana is the worst one at 6.5%. It's not even close. By far, Louisiana has not really grown home prices since 2020, which is nuts. Now, check this out. Since the peak of the market, like in 2022, a lot of areas peaked with home prices. You can see California is up only 0.4%, meaning in the last few years, overall, if you take the whole state of California, home prices are only up, barely up there, half a point. Look at Ohio, though. Prices are up 15% since 2022. Florida is down 5% since 2022. Texas, down 5% since 2022. Idaho, 5.5% down. Oregon, down 3. Arizona, down 9. So that kind of, it's like, oh, okay, what's happening? That gives you an idea just overall in the U.S. as far as state level anyway, what's happening. Then if I look at inventory, this will kind of tell you what's happening with active inventory. Versus 2019, the green states have more homes for sale than 2019. The brown have fewer homes for sale. So like Texas has 33% more homes on the market than 2019. California has 3% fewer homes on the market. Florida, 23% more homes on the market versus 2019. But as you travel up to Ohio, look at this. We have 25% or 24% fewer homes than 2019 in Ohio. We have less inventory. And then you go into New Jersey's 56% fewer homes. Vermont, 50%. New York, 40% fewer homes. Illinois, 57, almost 58% fewer homes than 2019. So again, brown states is where we have fewer homes for sale than 2019. This, though, will blow your mind. Look at this. Year over year, new listings. How many people are actually putting their house on the market compared to last year? Just last year. And again, if we were seeing a lot of distress, theoretically, we would see more homes on the market because people would be like, I got to list my second home, right? That whole narrative of like Airbnb collapse. Remember when that was supposed to happen? Well, if it did, people decided not to sell their Airbnbs, I guess, because new listings are struggling. Look at this. In Florida, new listings year over year are down 11% in Florida. There's 11% fewer people putting their house on the market. Nuts. Georgia, down 11%. Look at Ohio, basically flat, right? South Dakota has a lot more people, 35% more sellers entering the market. But overall, I don't see a lot of green. And that tells me that they're just that distress level is not where we probably need it to be to see home prices fall meaningfully. If I look at since 2019, this is even worse. So you go back to pre-COVID and say, hey, how many people in December of 2019 listed their house on the market in Florida? And then you look now. Well, compared to 2019, 3.5% fewer people listed their property for sale. Ohio is awful. 12% fewer people. 12% fewer new listings. However I want to say that. Look at Nevada. That's crazy. Down 63% in new listings versus 2019. Arizona down 12. There's only a few states that have more, right? Arkansas, Missouri, Kansas, Nebraska, West Virginia. Beyond that, though, the other states are like, nah, fewer new listings. Remember, new listings is like that key indicator. You'll know what's going to happen with the market because you're like, oh, a lot more new listings, more distress, probably more inventory coming, and lower prices. So we had some time, so I thought I would just run through that. Crazy, right? All right. Any other comments? Oh, I've got one more. Okay, I'll do this one. 95340. Where's that? I know it sounds like California. Let's do prices first. 95340. Oh, it's near Merced, California? Like east, what is that? Yeah, east of the Bay Area. Down 1.5% in home prices year over year. Since the peak, you're down 3%. Typical value, $398,000. And inventory, you've got 2%, 3% or so fewer homes listed right now in Merced, California, 95340. So it doesn't look like prices are crashing there. Let me go back to this typical value. But they're not at all-time highs, but they're close. I mean, you're within a 5 grand of your all-time high, and prices are just kind of sideways. And this could continue for years unless you get a lot more inventory or, heaven forbid, you get fewer homes on the market, which you don't want, I'm sure. Um, this story plays out over and over again. There's just a lot of these markets, there's just not enough inventory to cause a massive housing crash in prices. It's a crash in transactions. We know that, but not prices. So, moral of the story, something's definitely off with the market. Okay. That is because of equity, in my opinion. A lot of equity, a lot of people with no mortgage at all, and people that just quite frankly don't need to sell their property. We'll see an increase in foreclosures this year. I think we'll probably see an increase in foreclosures, a meaningful increase. But foreclosures are a good part of of the cycle. You got to have foreclosures. You got to. Suppressing them artificially is not going to help anybody. So we should just let them come through. And foreclosures are a natural part of a housing cycle. But I don't see millions and millions of foreclosures. I don't see that coming. But I do think foreclosures will increase. So that'll maybe help inventory this year somewhat. Maybe. Let me check your I did a poll on the channel before I started. Let me see what it says. I asked, what in the world? I asked basically if your housing market feels stuck right now. Does your housing market feel stuck? And 78% of y'all said yes. 78%, only 22% said that your housing market doesn't feel stuck. I mean, that tells us a lot. It really does. I mean, it's if you had a lot of listings and you had a lot of sellers in distress, you'd probably see people say, no, it doesn't feel stuck. People are buying homes at discounts. Unfortunately, we're just not seeing that. Homes, home on 2 acres, Ohio property tax is almost 5,000 a year. Add 400 to your house payment. Who wants a house in Ohio? I mean, I can't argue with you that. Well, I like to live in Ohio, but I can't argue with you that 2 acres, property tax almost 5 grand a year doesn't make sense. It really doesn't. Property tax is a massive problem here. Massive problem. It could be the next bailout. It could be, right? You could see that coming. It's a big problem. How do you replace that revenue? I mean, in Ohio, it's 24 billion a year. Actually, it's more like 48 billion. 24 billion is abated and given away. So they're collecting on like 24 billion a year in property tax. You got to replace that revenue somehow, or even if you replace 20 billion of the 24 because you got rid of 4 billion of grift. Well, you got to replace that somehow. It's going to have to be property, income tax or sales tax. Probably, right? It's not a easy solution at all. I'm a little surprised Idaho wasn't down more like 10% since 2022 from the remote workers leaving Seattle. Yeah, I mean, I'm seeing areas, Packet, where like as prices fall, buyers step in, because buyers are like, hey, I've been waiting for 2 years to buy a home that makes sense. Oh, prices are starting to come down. Now I'll buy. I'm seeing that. Uh, that may prop up prices or keep them from falling too much because I'm surprised how much demand is on the sideline. I mean, I get the comment after comment from everybody saying on the channel going, "Oh, I'm on the sideline waiting to buy." I get that a lot. So it seems like, mm, there's people out there waiting for the right opportunity. Maybe those opportunities are showing up in some markets with prices falling, so then they don't fall anymore, um, because they don't fall as much as maybe people hoped, right? Because there are buyers out there. As long as what's up, Tasty Tracy? As long as property tax and insurance are high, no one is going to buy no matter what the interest rates are. Well, I know you say that, but and don't get me wrong, we're not selling a ton of homes out there, but we'll probably still do like 4.3 million transactions in 2025 or 2026, sorry. I mean, that's what's nuts is that we'll still do like 4 point some million transactions, 4.2, 4.3, 4.4 million. Maybe more if rates come down. But yeah, there are people buying. But for the most part, and you're right, Tasty Tracy, a lot of this, the high cost of taxes and insurance are keeping people away. It makes the payment higher. So somebody asked, one of the first questions y'all asked me was this. If we remove property taxes, do you think it'll cause another spike in prices? So the evil overlord asked that at the jump, right at the beginning, before I even went live. And then you got Tasty Tracy saying, as long as property taxes and insurance are high, no one's going to buy no matter what the interest rates are. So that tells me if property taxes were removed from that equation, would more people buy? Probably. And would that drive prices up? It could. It may not happen immediately. Like, not going to like be a rush of buyers running out there. But I mean, imagine like if property taxes were eliminated and that headline came out, like in any state, Florida, Ohio, doesn't really matter. Imagine that. And you're somebody who's on the sidelines waiting to buy. Now, the house that you were just looking at, the price hasn't come down at all, but the payment now is 500, 750, maybe $1,000 cheaper. And the seller's like, I still don't need to sell. So I'm just going to leave my house priced the way it is. And now all of a sudden that house fits your budget. You could see in that scenario a buyer going YOLO and grabbing that house at the price that they're asking or competing with somebody to buy that house. It is going to be the economic experiment of a lifetime if a state removes property tax. It'll be like, because by the way, if nobody's removed it yet, Florida has not removed it at all. They haven't. So who's going to be the first state to do it and what will happen? It'll be fun to watch. And we'll watch it together. Anyway, thank you guys for joining me. I'm going to sign off. I am going to do an Ohio live on my Ohio channel here in the next. I may do it later today. It could even be tomorrow morning. But over the next few days, I will do an Ohio live for y'all. So if you want to know what's happening in Ohio, tune into that. Like, subscribe to the Housing Nerd. I hope this was valuable. I always learn something from y'all. I always do. So thank you. Have a great day. And I'm the Housing Nerd, and I am out. OUT, out.